Hello traders, welcome to the weekly outlook and setups volume 227. Iliya here. You know what we're going to be doing, having a look at the market, how it developed this week, what kind of opportunities we had, and most importantly what we can be expecting for the upcoming week. And as we also have the monthly candle closure, we are going to check out the monthly time frame and to potentially throw a little bit of a macro forecast for that. As you know, every brand new month I pick a giveaway winner who has the heart badge on his name when I look at my comments, and whoever is commenting and liking the videos a lot, they are getting a heart badge, right, for one of the most commenters on the channel. And for this month, this is gonna be Mr. Najmul Abedin. Hope I pronounced your name correctly, brother. Thank you so much for the support. Truly means a lot. You have been here for a very long time, so this is my jest to you to get you inside, working with the community, working with me, and taking your trading to a whole new level. So I'm gonna be looking forward to hearing from you. All right. Without being done, I can't wait to get into the markets because as January is closing, which was a pretty choppy month, right now February is coming in and NFP out of the way, with all the news out of the way, I do believe we're gonna start having some great price actions, so let's get into it. Alright, before we get into the technicals, let's just have a little bit of a news overview of the week that is ahead of us. So first of all, on Monday, we have a speech from Powell, which is very important, and I see that it goes off pretty early. Like, this is 2 a.m. my time. That is pretty much when Asia opens. Not sure why does he speak so late in New York and so early. Then of course we have 5 p.m, which is like around 3 hours into New York open. We have services PMI. Very important news release. The PMIs are usually very volatile. We had the PMI last week that really shook the market a little bit. NZD bank holiday. Then on Tuesday, you see we have a lot of news. So NZD and Aussie news. That makes a first impression to me. And then of course we have some like GBP, CAD, USD. So Tuesday is gonna be a great day. And if you're looking to be trading like the Aussie and the NZD, wait for Tuesday and then start trading it afterwards. Wednesday, it's only USD news, so we have some FOMC members speaking, so could be a quiet day or could just be a continuation of Tuesday. Thursday, also only USD news, so this week is perfect for trading the USD. I love it because hopefully we're gonna get some clear price action. And on Friday, we're ending with some Aussie and Canadian news, but of course Friday is tricky, so I'm gonna be giving my best actually, if I don't go out of home on Monday, to go skiing maybe. I will definitely start looking from Monday all the way until Thursday to be looking to catch some USD trades. But of course, Mondays, I usually prefer to let them play out because Monday is usually kind of starting to show you where the market wants to go, and Tuesday could potentially shift. So again, it's all about being like a sniper and waiting for exactly the right time to actually strike on a high probability trade. So this week looks pretty good. We have a very nice combination of news, mainly USD. I don't see any Euro news at all. But of course, Euro USD is a USD pair, so I truly hope we're going to get moving this week. Nothing that is very important that we should watch out. So let's get into the charts. Let's get started with a DXY to have an overview of what the dollar is overall doing so far. So again, as I said, we're having the monthly candle closure right now. It is an inside bar formation, so January's candle closed within December's candle, so we can expect a potential breakout. And usually, again, it is just logical potentially for us to break above this high, that is December's high, in order for us to tap inside this monthly imbalance area, which is something that I have been looking for a very long time. And right now, looking at the overall momentum that is going on, which is bullish, I do believe this is potentially our draw on liquidity. This is potentially where the market could be gravitating towards. And then, of course, the big question is going to come in. Are we going to tap here and then potentially move all the way down to the monthly lows? Because if this happens and if we start getting the confirmations that the market wants to reverse from here, we could actually have even, I don't want to stretch it out, but we could have a whole month and even 2 months of bearish price action that we can just focus on targeting first this low and then even potentially that low. So let's see, very interesting. So this also builds a potential clear bias for next week because I'm just gonna put, for example, a line like this that is gonna be my liquidity line. This is where potentially I do believe the market is going to go. we're having an overall bullish week, which is pretty nice, and it's getting very, very, very close to that monthly zone. So I pretty much think, again, I don't want to say I'm sure, but I really think that we are going to be taking out this high. Of course, the market, wow, look at that. I mean, heavy choppiness for 11 bars, 11 days of a heavy chop. We had on Thursday, the market went bearish, but then on Friday NFP, the market went bullish. This is why you do not trade this week. This week, there were some good opportunities. Personally, I only took a break even on GBP AUD, and the bastard then ran for TP, but because it was a swing trade, and it was my first swing trade since 3 years, I chickened out of it at break even and then hit TP overnight. But again, gotta get used to that. So again, no trades for me this week, especially on the USD pairs. There were, of course, some trades, but if the dollar is consolidating like this, I don't want to get involved. A very nice Friday candle. So I would immediately expect potentially on Monday, or yeah, potentially Monday, for us to start continuing higher. And again, you can see this is what you're trading. It's a pure consolidation. But right now, again, we had this kind of a manipulation lower, because if you imagine on Thursday, we had the, what kind of news we had on Thursday? I think the PMI was on Thursday. Imagine we have this very nice drop and everybody starts looking for shorts, right? And then, for example, breakout traders are selling below this low. People that are long getting a stop loss. So all the liquidity was collected here. And then, of course, NFP comes in, whoop, stops out all the sellers. And right now, we could potentially start targeting this high. Now, the only thing I see as a point of reference is going to be this big hourly zone. So again, where are we going to be tapping into? I would not expect a very big tap. In fact, I'm just going to draw a line like this. We can expect it anywhere within this upper region. Because as I'm telling you a lot of times, when you have that hourly trend change, which is the first trend change, that happens with a lot of momentum, the market does not pull back to 50%. It does not pull back to retest the higher low. It usually just gives a quick ping and then it goes higher. So this is my DXY overview. For pretty much for the first part of the week, I would expect a pullback long into that liquidity area. And then after we tap that monthly zone, this is when we also have to step back a little bit and wait. Because from a monthly zone, I would like to see the daily shift. I would, not even the weekly, but I would like to see the daily time frame to start shifting bearish. And then of course the forward time frame is also going to shift bearish first. But first of all, let's take a long into that zone. And then from there, we're going to see how it goes for the rest of the month. So long bias on the DXY for now. Let's see how the other pairs are looking like. Well, you know, Euro USD is pretty much the opposite of the DXY. We also do have this very tiny little bit of a monthly imbalance here to potentially for the market to gravitate towards. Looking once again at January's candle, it's an inside bar of December's candle, so we can either be taking the high or the low next month. And again, what makes sense to be taken is the low. But again, I would not 100% require it based on what happens first on the DXY. So imagine the DXY actually taps the monthly zone and starts rejecting, while EU does not tap the monthly zone. I don't care, because again, then I'm going to use the DXY as a potential clue that EU could start going higher without even tapping this zone. So just keep this at the back of your mind. Now, weekly time frame, it's just been sliding down, also creating those wicks to the downside, which kind of made me think we could go higher. But right now, again, we're having a very nice and clear bearish candle on the weekly. On the daily time frame, it is quite choppy. It's very, very, very choppy. Very choppy. But then again, you can see on Thursday, bullish candle. Friday, very nice bearish candle. But again, it's just choppy. So nothing that I could extract from the daily. And going forward, I would really like to trade with a clear daily time frame. Because if the daily time frame is clear, if you have a clear trend on the daily, then everything is easy. Everything just goes. And if the daily is choppy, you will most likely, probably some of you right now are potentially taking losses. Taking trade here, stop loss there, stop loss, hourly time frame goes down, then goes up, then goes down, then goes up. Just go up a time frame and you're going to see a choppy price action. So here once again, similar to the DXY, we're having this very big expansion lower after potentially grabbing some liquidity. We also have that little guy right there that we do not have on the DXY. So once again, I'm going to be looking for either of those two levels to get retested to potentially continue going lower. You can see that actually this low is still intact. So I would love for the market to open bullish, either tap here or tap there. It doesn't really matter for me as long as I start seeing then the shifts on the 50-minute time frame, then I would potentially look to continue lower. And then of course the bigger question is, are we going to go all the way down to that monthly zone? Again, I will be watching out the DXY close, but as for right now, DXY is bullish, Euro USD is bearish, looking for potential shorts on EU even on Monday. That is possible, so let's see. Very simple bias. Let's keep going forward. Isn't GBP USD one of the choppiest pairs ever right now? So we're having, again, an inside bar, December, then January inside bar, but look at it. Pure consolidation, which is of course pretty good. And still we do have this very nice and clear monthly imbalance. So are we going to tap in right here and then continue going higher, or are we not? Like, that is the big question. Of course, I still definitely keep this one in mind, but I would like for the lower time frames to potentially show me that they want to go down. But again, here we've had, 5 weeks of choppiness, pretty much a month and a little bit more. This week, again, bearish candle, but does not tell us a lot. Daily time frame, absolute choppiness. But once again, the last 2 days is where the manipulation kind of happened. You can see we're having this very big kind of consolidation. And then if you actually carefully have a look at the lows, like here you can see we had a low, it got swept. Then here we had a high, it got swept. This one did not get swept, but it was just up and down. And right now, potentially after grabbing the liquidity, we could start heading lower. The first clear target that I see is going to be this one. And very likely similar to EU and the DXY, we're having this quality, this quality development right there. There was a lovely long trade on Thursday right there. I'm actually going to journal it, and I actually saw it live, but still I am currently in a little bit of a forward testing mode as I'm refining my plan. So I don't really gonna just jump straight into live trading, because whenever I've done this, I kind of trying to implement something new and just straight jumping into live, I take some losses, and then of course you get a little bit disappointed. So if you're looking to test out something new, then first observe, because with observation, you don't have emotions, you don't have money on the line, so that actually the knowledge sticks a little bit better into your mind. Now again, similar again, as I said on EU, and the DXY is bullish. This one is also bearish. So again, looking to see, we have those two very big imbalance areas. But as I keep telling you, when the market is making a massive trend change like this, I do not expect, because usually in the past, I would draw like a 50% line down and say, yep, I'm going to wait for 50% and then a continuation lower. Well, no, on the first trend change, that happens with a lot of momentum, the market does tend to pull back 20-30% of the leg. So I would be looking for a tap somewhere right there, and then potentially continuing going lower. First target, of course, it's going to be that low, depending on how Monday opens. If Monday opens bullish, definitely a very good short opportunity. But if it opens bearish, that same goes for EU, and we kind of break lower, then that is going to change stuff a little bit. So then, of course, later we can wait for a pullback, but it's going to change a little bit the narrative. So that is GU. Also bearish bias. As long as the DXY fulfills what we forecasted, then EU and GU could potentially go short. They both look very good on the quality time frame, but if I am to pick, I would pick EU, because EU also looks a little bit better on the weekly and also looks a little bit better on the daily. So that is GU. Let's see if it goes shorts next week. If we have a look at the previous weekly outlook and setups, we actually got Aussie dollar right, because it kind of pinked a little bit that monthly zone, but it was just with a pip, even less than a pip. And then I thought we could come in again, and right now we are coming in again freshly on a brand new month, also taking out the previous monthly low. So honestly, Aussie dollar looks pretty good for a long setup right now, if of course the monthly time frame, that most recent monthly momentum, is actually going to follow through. So I am definitely, in terms of the macro time frame, I am definitely bullish on Aussie dollar. But first of all, we do have to see bearishness, because so far order flow is bearish. And again, we pointed out this weekly imbalance here, and we said if the market taps inside this weekly imbalance, it could take us into the monthly, and this is exactly what happened. So right now we're having a very nice bearish candle. So what I want to see next week is for the market to cross above that line. Why to cross above that line? Well, because if the market does not cross above it, in terms of a wick and in terms of the candle, we could have another weekly imbalance. So if the market like continues from here and like maybe drops lower and, for example, leaves a wick like this, yeah, it doesn't look very good, but we're going to have this gap, and this is not good. So what I would like to see for next week, if longs are actually going to be confirmed, for the market to actually just cross this line, because that is going to prevent a weekly imbalance from forming. That is going to be a little bit of a clue that we might potentially start going higher. Daily time frame, so there is, we tapped in here on the 30th of January on Tuesday, then we tapped in again on Wednesday, shorted, and then pretty much Thursday made the move. Friday came back and still went lower. So there is some rejection going on, but again, it's not enough. It's potentially not ready. We still have to wait for that DXY to maybe tap into the zone, and then maybe all the currencies are gonna just roll down together. Aussie dollar was very tricky because we had like first the tap here, then there were some sort of news on the Aussie, came in again. It provided a beautiful short, by the way. So there is, for example, we had the hourly trend change here with an imbalance. It got pink right here, but it was Asia. So if you're trading during Asian session, Aussie dollar is a great pair. Tapped in, very nicely reacted, but again, it was structure was still bearish. Lower high, lower low, pulls back to made a lower high, and then we just dropped lower, making a new structure break, and again, still leaving bearish imbalances on the hourly time frame. So I would much prefer to be trading EU and GEO right now rather than AU. We, however, have cash rate. So we have this here on Tuesday. So that could definitely give us some more clues about what the Aussie dollar is going to do. But personally, I would not include this in my watch list to be trading it because it's in a monthly zone. It's currently bearish on the hourly time frame, and I would start expecting it to become bullish. So instead of actually trying to take shorts into that monthly zone, I will start looking for here for the market to start shifting bullish, and I would much better trade, for example, EU and GU that are not yet into a monthly zone. So that is Aussie dollar. Staying on the sidelines, because right now what you can see is we're having a sandwich between a monthly zone and a weekly zone. The weekly zone prevailed. It actually did its job to tap in and then take out the weekly low. That is great, but right now we have to allow a little bit of time to see what is going to happen. And if you want to scalp it, then of course we could have a little bit of a tap inside this hourly zone and then maybe make a little bit of a move. That is fine, but I'm looking for clear big moves, and as we're in this monthly zone, I would be waiting. So that is Aussie dollar. Gonna keep it short on NZUSD because it's exactly the same as AUDUSD. We're having this overall monthly zone that the market actually tapped in last month, rejected a little bit, and right now we're taking out the previous monthly low, so which is very good. So that is very good. I would essentially want to see right now, of course, the weekly time frame and the daily time frame to start popping higher, because here, like there was a slight bit of a trickiness, because it was Aussie dollar that didn't tap into the monthly zone, while it was NZUSD that did tap in the previous week. And we said, okay, we could potentially push higher, but the market encountered this, of course, resistance area in terms of this weekly imbalance. And because the overall sentiment of the market is not yet a bearish DXY, so those other currencies, NZUSD, AUSD, EURUSD, can go bullish. This cannot really push. And you can see from this monthly zone, it was choppy. There was no momentum. So then the market actually tapped into the weekly zone, followed through, and took out the weekly low. I didn't really expect this to happen, but again, it was the market was just showing us that it doesn't want to push up. Here we had like a shift, chop, 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 pushed up, all right, cool. Then it came in again, then it aligned bearish, then it came in again, lower high, and right now it's making a lower low. So NZUSD also a pair that I do not like at all right now. Exactly the same thing as all the other pairs, although this one has already taken the weekly low. This is also previous monthly low, and it's rejecting below it. So if you ask me, I don't think NZUSD is a great pair to be traded next week. We do have news about it on Tuesday, so maybe on Wednesday you can have a look at what is happening with it, but I don't like it. It's again in that kind of sandwich, tapping inside the monthly zone once again, taking out the previous monthly low, but also coming in from a weekly zone with a lot of bearish momentum on the 4H. So when you have this kind of confusion between the higher time frames and the lower time frames, you want to wait. You want to wait, but of course, similar to the rest of the pairs, that is the short-term setup right here. So if we get a bullish pullback, maybe Monday, Tuesday, we can look for a quick short. Of course, if everything is looking fine so far, that could be a quick trade, but preferably AUDUSD and NZUSD, wait for them to show you more signs because they're sitting in a monthly zone. And if that monthly zone gets respected, you're going to have 2 months of potential bullish price action. So let's wait. Well, having a look at gold, it's looking very, very, very uncertain. On the monthly time frame, yes, we popped higher. We took out the all-time highs, We rejected above them, and the generous candle is again an inside bar, very, very, very slow. Translating this onto the weekly time frame, we have no signs at all. Like at first it looked pretty strong, creating this weekly imbalance, tapped in, it tried to push, it created this another weekly imbalance, but this one is right now taken out, and we're just chopping on the weekly time frame. So nothing to extract much on the weekly time frame. We do have a, it's not even a bullish wick. The wick is actually bigger than the body. It does look bigger, right? 25.12, and yeah, it's pretty much the same. So not liking it, not liking it. We did have a little bit of a forecast in terms of the daily, because the daily did make a bearish trend change. It did make a lower low, pulls back into the imbalance to potentially make a lower high and attack the low. But again, you can see 1 day, 2 day, 3 day, tries to push, fails, and then it just rolled into the highs, creating also slight little bit of a bullish daily imbalance here. So again, guys, I don't like gold right now. I don't like it simply because, like, I don't really look at the weekly time frame, but when the weekly is tricky and you have a whole month of a choppiness, you literally don't have a trend. Because if the weekly is not like clearly pushing higher, then of course the 4-hourly time frame is going to be making higher lows and higher highs. Here, pushing lower, lower highs and lower lows, pushing higher, right? That is clear structure. That is clear price action. Even here, it's making structure. Right now, we like since the 25th of December, we're just chopping. So wait for it. Be patient. Again, I know a lot of you like to trade gold only, but you also have to know when to trade something, because right now it's not respecting structure. Yes, we had this daily zone. Right now it's getting tapped in, but it tapped it in, and looking at the 4-hourly, it's just crazy. It's not nice. Like it broke, it made a TC down here with a wick. It has this, of course, this bearish imbalance, but this bearish imbalance is tapping into a bullish imbalance. The bullish one on the daily should prevail. Not nice, not nice. Personally, personally, I will definitely give gold some time to start trending clearly on the daily, to start trending clearly on the weekly, and only then I'm gonna have a look at it. So sorry, gold lovers, but I don't think this is a high probability instrument exactly at this time. USD JPY, lovely pair, by the way. When it moves very nicely. So this is definitely a pair that I'm going to be adding to my watch list. Now, a very nice monthly candle, if you ask me. Like looking at the other monthly candles, they're inside bars. This one actually moved very nicely. Right now, the new month is opening, and it's potentially trying to push above the previous monthly high, which is going to be our first liquidity point, and then potentially we could even push above that monthly high, but that is a little bit far away in time. Look at this, like that is good right now. We push down, good. If you look at this push down, there is not a, well, there was a little bit of an imbalance here, but very, very, very tiny little one. But then we reached this bottom and we started making bullish imbalances. There is a weekly imbalance here. Then we had this expansion. Then this week pretty much consolidated to create this weekly imbalance right here. And we tapped it in this week. So tapped it in very nicely, rejecting above it. So again, the first target is literally the monthly high and the weekly high. I do believe we could be a little bit too late. Like this one happened on Friday. Like, come on, you have to wait the whole week just for Friday's NFP to be making the whole move. That sucks. Big chop, big chop, big chop. Came in again, rejected, came in again, rejected. And then on Friday, we're having a very nice push. So right now, as we're having a very nice push phase on the daily time frame, I do not want to see the market cross below this line, because that is going to prevent a daily imbalance from happening. And I would like to see a daily imbalance to form so that I can potentially on Tuesday trade into it and then look for a continuation higher, which means that we have to follow something on the 4-hourly time frame. And on the 4-hourly time frame, similar to the rest of the pairs, we do have this, and of course we do have this big guy right there. So I don't care which one it taps, as long as I'm given the 15-minute confirmation signs, either here or either there, but not towards this line. If it taps this line on Monday, I don't like longs anymore. But again, first scenario, yeah, it's not really the first scenario, but I just see those two. Again, something that I wouldn't really like to see is for the market to open and to pop out the high. And even if it pops out the high, then I'm going to be looking for the daily candle to close as an imbalance. And then I'm going to be looking for it to be traded into and then potentially longs again. So that is UJ. Looks actually pretty good for a long setup, coming in from a weekly zone, targeting the weekly high, targeting the monthly high, and expecting a potential expansion higher, as long as the DXY is also going bullish and traveling towards that monthly zone. So we can long USD JPY until the DXY reaches this area, because if it reaches this area, starts shifting lower, then USD JPY could potentially start shifting lower as well. But as of right now, fresh price action, looking for longs, and those are the two areas that I'm interested in. Let's have a look at Euro Yen monthly time frame. Nothing much to extract from it here. Of course, we do look like we're overall bullish. The very recent potential liquidity target could be the previous monthly high. So that is the first thing that I see there. Dropping onto the weekly time frame, what I don't like about EJ is that it does not have a weekly imbalance. While as we're gonna have a look at GJ next, it does have one and it's actually reacting from it. So if I'm to pick between EJ and GJ, I'm definitely gonna pick GJ. So again, overall bearish week right now, but look at the rejection. It is a very nice rejection candle right there. So then dropping onto the daily time frame, what I like to see on the daily time frame is a daily imbalance to be created. The market came back, it swept some lows right there. Did it sweep on the weekly something? No, not really. So probably swept this low because it very nicely rejected below it. We're having this morning star formation. So again, similar to what I've been telling you to the other pairs, I do not want to see the market cross below this line because that is going to prevent the daily imbalance from forming. And if you ask me what I will look for EJ is for Monday's candle to close to make a daily imbalance and then potentially Tuesday, Wednesday to trade into it and then target the highs. That's EJ. Because right now, yeah, you could take a short-term setup, but this one doesn't even have forward imbalances. It's bullish. It's not even bullish in structure yet. I don't like it. I don't like it. So it's still bearish. I will skip this pair. I would wait for the daily. I would preferably want to see another daily candle to expand, show me bullishness on the daily, because on the daily, on the way back, we do not have any imbalances created. And again, I look at imbalances in terms of momentum. So what is momentum? Imbalances. Like here you can see clearly momentum in terms of the candles, but you can see imbalances are being formed, right? This, again, clearly no momentum. You can see no imbalances formed. This is just logical. So that is EJ, waiting for a daily candle closure to form that daily imbalance area, something like this. And then potentially I'm going to be looking for the market to tap inside and have a continuation higher. But let's have a look at GJ, which I think it's a higher probability pair right now. All right, GJ. So the thing that I do not like about this one is that it actually took out the monthly high. So the liquidity has been taken. So of course, after a monthly high, you could expect a potential withdrawal lower. But then transferring onto the weekly time frame, you can see the weekly time frame is kind of making a pullback right now. I don't like that we didn't really have any kind of close above this zone. I would truly love to see like a close above that to confirm that we could potentially go higher. But right now we are tapping into, oh, what am I doing? We're tapping into a weekly zone. And we have one below that I'm going to keep as a second resort or a last resort for the market to go higher. But I really do like the weekly rejection right now. On the daily time frame, exactly the same as on EJ. I do not like to cross for the market to cross below this line because that is going to prevent the daily imbalance from forming. I do believe we pulled back enough. You can see that EJ swept a low. So if you have a look at EJ swept that low. GJ did not. Why? Well, because it had imbalance. It had a potential area to respond from. EJ did not, so it came in to sweep a low. Definitely a bullish candle I would like to see to form that daily imbalance. Then we can have a very nice clear target towards those highs. And on the 40 time frame, also slightly bit slower. Yeah, not very nice. And again, you can see we have a very tiny little bit of an imbalance. Structure is still bearish. So that is also something that I don't, oh no, it's not bearish. Good, okay. So GJ is absolutely better pair. Absolutely bear pair, but I would personally wait for the daily candle to close. I would wait for a Monday to close to form that daily imbalance, and then I'm going to look to trade from that. Because right now, we don't have much, and I just hope the market doesn't do this. Because if it does this, we're not going to have a daily imbalance, and then, of course, it could get choppy. So here we have a slight bit of a fall. Maybe it could react from there. But personally, guys, on GJ and EJ, waiting for the daily candle to close, looking at how it closes, does it create that daily imbalance? If yes, then you get a clear long bias. And of course, that also depends on UJ if it's gonna go higher. So let's see. The GBPs look very nicely longs. I would prefer to trade USDN mostly because this one is the main one. And the crosses like GJ and EJ, they're usually very tough because again, being a combination between Euro USD and USD JPY usually does not work great. So I would prefer to trade UJ because that is gonna provide potentially the cleanest move. Well, indices, we keep pushing towards all-time highs, and it's getting trickier because as we make new all-time highs, there is nothing much to refer to the left to, and you just have to flow with the very recent price action. What I really like is that we're having a new monthly imbalance being created that again, once again, suggests momentum. Not necessarily for the market to come back, fill it, and then reverse from there. No, I also look at it in terms of momentum, because if there was no imbalance being created, and that suggests there is no momentum, so very likely the market is not really gonna make a true move. Already, we're taking out the previous monthly high. Market opens, continues to push up, okay. And you can see that on the weekly time frame, we did also have a previous imbalance there that we actually just pinged. Yeah, we did ping it. There was also a gap right there, so the market filled that gap and expanded higher. So it's in a very big push phase, and when it's in a very big push phase, I don't like it. So for example, an absolutely lovely trade was from here, where we have this push, we have this pullback, a whole week of a pullback, and then you get like, for example, a whole week or two to target the high. But right now we're just making a higher high, and the market could start turning back anytime. Now this weekly zone does look tapped. Yeah, it actually tapped on Wednesday and then Thursday long. Wow, why didn't I take longs on Thursday on this one? I think I looked at it, but it developed a little bit late. So right now what you can see though is that from this weekly zone, we don't have a daily imbalance being created. So again, if we don't have a daily, very likely the hourly time frame is not going to hold. But yeah, this one I do remember I was monitoring it here, and it just started expanding a little bit late for me. Yeah, it actually expanded in Asia because I was definitely looking for longs. Yeah, you can see 16 o'clock, 17 o'clock. Yeah, that is entering into Asia right there. So honestly, I would say I'm definitely still long bias. I would like to see it continue going higher. I would like to also see daily imbalances being created. The very recent one we have is this little guy. So we actually had a very nice long on Friday that I'm going to journal both on NASDAQ and SPX. I was traveling, getting back home from Italy, so I couldn't trade this one, but that was beautiful. 4-hourly zone, tapped in, coming from a weekly zone, boom, very nice long right there for NFP. Right now we do have this 4-hourly zone, but if this 4-hourly zone fails and starts making bearishness, then I would expect for us to maybe start pulling back a little bit lower. But again, guys, right now, it's slightly bit hard to forecast. If it's gonna go higher, I would like to see daily imbalances to be created higher because on this weekly one is already tapped. And if we start getting those shifts of momentum, then that could mean the market might come to tap down there. So again, I'm not definitely gonna say to give this one some time because it's clear. I just want to flow a little bit with the 4-hourly time from here because I don't have something on the daily to work with, the part that the market is bullish and we have this overall sell to buy. So if the 4-hourly time frame sustains from this very recent zone, good, then we can long it. But if it breaks below it and starts forming bearish ones, I would expect a little bit of a bearishness and then potentially start looking for the bullish signs again. We could come in to revisit this zone again. So slightly bit tricky. As I told you, when it's making a hard high, it gets a little bit tricky. So I would see how it responds from this zone. And of course, I am personally going to give it some time, especially Monday, to kind of show me what it wants to do. And then I'm going to get back to it. So that is SPX. Well, NASDAQ as well, continuing to push higher, and already on the first days of the month, it's taking out the monthly high. So by a very little bit, but we opened and we took out the monthly high. Now the previous monthly candle did create a slight little bit of an imbalance. I'm not even going to draw it because it's very little. So overall, still on the monthly, we are bullish. Now, again, weekly time frame similar to SPX. We had this beautiful weekly zone that the market tapped into Wednesday, and on Thursday we get a long, and then you can see that on Friday there was also a little long, and then eventually it took out the high and it rejected above it. You can see, so what I don't like about SPX and NASDAQ is that they're not creating a daily imbalance from the weekly imbalance. Because again, if you start getting that pyramid effect, like from a monthly zone, you get a weekly zone, then you get a daily zone, then you get a forward zone, then the market goes. But if, for example, from this weekly zone, we don't get a daily, and then the forward time frame starts to shift bearish, red flag. Because then if the forward time frame shifts bearish, the daily will shift bearish, the weekly will shift bearish, and maybe we're gonna go to retest the monthly before we go higher. So that is the kind of the psychology behind it. Now, forward time frame, absolutely lovely long on NFP. I'm gonna journal it, pumped higher, took out liquidity right now, and of course after this we're creating this very little forward imbalance there as well. Structure is still bullish, but again, as I told you, I don't like that we do not have a daily imbalance. I do not like that we're taking already the previous monthly high and we're kind of rejecting above it. So in order for me to go long, I would need to see on the daily a very nice expansion higher, and then potentially I'm going to keep following it. But if it starts right now, again, this is why this forward zone both on SPX and on Nasdaq is key, because if this one breaks, and maybe even if the forward time frame shifts structure and makes bearish imbalance, then we might start heading lower. So those are my two scenarios. Again, guys, I'm not here to forecast. I'm not here to say this is going to happen, because that is the wrong way to trade. And if you listen to somebody that is kind of telling you this should happen, this must happen, that is what the market is going to do. The market is not random. That is BS, because it's random. And again, the skill is to flow with the market. So that is Nasdaq. Let's see what happens. DAX, aka German 40, looks pretty good on the monthly time frame. A very nice monthly push. We do have a very little, it's not very little, in fact, it's actually good. We have a monthly imbalance that once again suggests momentum. Monthly candle opens and it takes out the previous monthly high. So right now it could be easy maybe for the market to return back to that monthly zone, and from there to maybe start pushing higher. We have a wick right there, and there is a very nice wick on the bottom that suggests that kind of rejection is already happening. So this one is 50-50. Again, how do we know if the market is going to come back to retest the monthly zone? Hourly and daily are going to tell us. The weekly, not that much probably. This one, again, you can see does not create a weekly imbalance, right? So that is already a red flag. We have swept the monthly high. That is already a red flag. I mean, red flag for a continuation higher. Daily time frame, it's choppy, right? Well, it's choppy. The most recent imbalance is here. We actually tapped it on Thursday. We got a long. I was actually paper trading this long here. We took out the high as well. And again, we're not making a new one. So I start seeing potential bearishness kicking in right here. And again, you can actually see it here in price. The market from this daily zone, beautiful long by the way here, very nice long, took out the high, forward imbalance, very good. It tapped in, tried it, tapped in, tried it again, and what it actually ended up doing, slight little bit of a bearish imbalance right there. Structure is not shifted yet, but again, as I keep telling you, in terms of momentum, it's starting to shift. So again, the indices do look the same. They do look the same. They're all at very crucial highs right now, so it makes it very, very tricky to be very confident on going long. This one is the first index that it actually shows me a little bit of a bearishness. If I have another expansion lower in the forward time frame here, I will definitely take a short targeting this low. And if, of course, the forward time frame follows through, we could actually have daily imbalance. And if we have a daily imbalance and a weekly, we could be getting towards that monthly zone. So that is my current thought process. It's not ready yet. So again, I would like to see Monday play out. I would like to see if we're going to have a break below this level with a new forward imbalance. Then I'm going to get confident to be taking short. Even though structure is still bullish, I will take a short targeting the trend change. Because again, if structure is to remain bullish, imbalances have to be respected. Or at least we should not make any bearish ones. If you start making bearish ones, that again suggests shift of momentum. So we could start expecting the opposite side to be taken. So that is German 40. I have a lot of potential clues for a potential short. So let's see, how do we flow? US 30 also very, very nice expansion, making a very nice monthly imbalance right here and already kind of running away from it. So is it going to come back? Well, again, as I told you in the previous pair, we're going to know if it comes back by the forward time frame and the daily time frame. So transferring onto the weekly time frame, here we have a good signal. We're having a weekly imbalance that again suggests that even the monthly, the lower time frames are still trending higher. Transferring this on the daily. Now on the daily, we had a little imbalance right there. The market came in, respected, pushing higher. Nothing much right now happening on the daily, so we have to give it a little bit more time. But we have this weekly zone to be created. Now again, it's like imagine the domino effect. So right now, if the forward time frame shifts lower, then that is gonna mean it's driving us towards that weekly zone. So this is why I'm telling you, I hate to say this because I always say we need some time, and we do need it because again, patience. Trading is all about patience. You have to wait for the right time, you have to wait for the right signs, and then you have to only strike when it just makes sense. I mean, think about it. There are some trades that you take that just snap. You're like, yeah, that is a good trade. You take it and you don't have any feelings about it. And there are other trades that you don't want to trade, you hesitate, you maybe take it, and then you panic and you fear and you overthink. Right? So there is a difference. You have to really filter out to be taking only those trades that feel good, that look good. So you actually not micromanage and you actually get a pretty profitable trade, because usually those trades are going to be profitable. Now, fall imbalance here as well, similar to the rest of the indices. If we break below here, making a bearish imbalance, then I'm going to take a short into the weekly zone. Right, so I'm already starting to forecast shorts, but if we have a rejection from here, impulse very nice higher, I'm going to take a long. So as of this moment, again, guys, I'm waiting because there is nothing to do. You could force something, but again, not high probability. You do not want to trade every day. You don't want to trade every move. You have to wait for the right moves like a sniper. So that is US30. And again, we're having an overall kind of scenario on indices that I'm gonna cover right now in the recap. So that is US30. We gotta wait and we gotta watch out for those two scenarios. All right, let's recap. DXY's bias is looking pretty good. I just hope it doesn't enter another choppy period right now, but overall long bias on the dollar. We're having a lovely forward zone to potentially drive us into that monthly zone. So if we have a bullish bias on the Dixie, that means that EU and GU, and of course all the USD pairs, are very high probability to be taking shorts. And of course we have EU and GU with two very lovely setups, something that I'm definitely going to be focused on. Aussie dollar and NZD dollar, I would much prefer to trade EU and GU rather than NU and AU. Why? Well, because AU and NU are already tapping into a monthly zone. So that is kind of giving us a little bit of a sandwich. There is going to be some bullish pressure coming in from that monthly zone. Although again, you can see on NZUSD it came in, but it didn't really follow through. AUDUSD is just also tapping into it. So again, it's 50-50 and you do not want to trade a 50-50 bias. Gold, again, honestly, it's just choppy. So give it some time. USD/JPY, absolutely lovely setup coming in from a weekly zone. And right now we're transferring onto a potential daily zone being created. And also all the way we're having hourly zones being created. So I am looking for longs on USD/JPY. Also same thing, we're having long setups potentially on EJ and GJ. But here you would like to wait for a daily candle to close in order to make a daily imbalance. And then from that is going to give you a clue that the market has bullish momentum and it wants to go up. And if it does this, then you're going to have a clear setup. Now, indices, they have a very similar kind of vibe. They all have monthly imbalances to potentially pull back to. But again, how do we know if they're going to come back to the monthly imbalances? By looking at the daily and the forward time frame. So if the daily time frame and the forward time frames stop making bullish imbalances on the way up, which again suggests that the bullish trend is not yet good, we could start rolling down. And we could first, of course, target if we have a weekly zone. We have a weekly zone here on SPX. We have a weekly zone on NASDAQ, but they're already tapped in. So then, of course, we can start expecting the monthly zones to tap. So again, for indices, it is very key to monitor the forward time frame right now. Because if the forward imbalances stop being respected, then, of course, we're going to have bearish ones and then we can drive lower. So again, very key to observe what is going to happen. And what I really do not like about the indices right now is that they're at all-time highs and they're taking very key major highs. Like for example, NASDAQ already took out the previous monthly high. SPX already took it out. US30 and DAX are also taking out above it. So again, if we start having bearish order flow on the forward time frame, I could already project, because we don't have anything on the daily, that we're going to pull back into the weekly. And maybe if the weekly fails, even into the monthly time frame. But again, this is all about the flow, and I'm going to be updating you, of course, every single week on that. So the highlight for next week is long DXY, so short Euro USD, GBP USD, and long USD yen, and potentially long on some of the yen pairs. And of course, observing how the indices go. Also, DAX is a very nice setup. If we have another hourly imbalance to expand lower, that could also provide a very nice short. So guys, that is from me. Let me know how your week went this week. Did you trade? Did you not trade? What trades did you took? Was it profitable? Was it not? What did you learn? Let me know, and I'm gonna talk to you on Wednesday.